Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus is on the IPO bound Go Digit General Insurance. The company will be opening its IPO on May 15 and it will close on May 17. Remember, the allocation for anchor investors for Go Digit IPO is scheduled to take place on May 14th now, and this IPO consists of a fresh issue of shares of 1125 odd crores and an offer for sale of component of about 5.5 crore equity shares, and the price band also the company has now come out with, which is 258 rupees to 272 rupees per equity share with a face value of 10 rupees each. Now, to detail for us some of the insights into this IPO as well as the company's vision for growth going forward from here, I'm now joined by the top management of the company. Kamesh Goyal joins it. He's the chairman of Go Digit. Welcome, sir. Thank you so much for taking the time out for this discussion. First up, if you could help our viewers really understand your aim of launching this IPO and how are you planning to use the proceeds from the fresh issue. Of course, this has been a much awaited IPO. It's been about 2 times before that you had to, adhere to the SEBI guidelines and again come out with differentiated DRHP. So, what does it really mean to you now?
Thanks a lot, Sakshi, for having me. The purpose of IPO, the primary capital, is to boost the solvency margin. In insurance business, like banks, you have capital adequacy. In insurance, you need to beef up your solvency, which is related to the premium which you have. So the primary offer of 1125 crores is to increase our solvency margin. Our solvency margin as of December 31st, 23 is 160% or so, and the minimum required is 150. Our sense is that after this capital raise, our solvency will exceed 200%. So that's really the primary purpose of the solvency ratio.
Okay. So also the other shareholders include Canada-based Fairfax. There's the Indian cricketer Virat Kohli, actor Anushka Sharma have also been among the shareholders. Would they be participating in the OFS?
So actually, Fairfax and we are joint shareholders of the holding company, which is Go Digit Infoworks. So the share sale is primarily coming from the holding company. Other investors are not really selling, barring 2-3 retail shareholders. So almost all the primary offering is coming from the holding company, and others are not selling in the IPO process.
So what will be the shareholding pattern, sir, once the IPO comes out and the company gets listed then?
So the holding company, and all this is part of Sakshi of the RHP, I think holding company owns about 83% in the general insurance company. And after the offer for sale, this will come down to somewhere around maybe 75-74% or so, roughly, because we are issuing some fresh shares. And as you rightly said, we are selling about 5.4 crores of shares. So my sense is there's not exact calculation, but this would go down maybe from 83% to 74-75 or so.
Okay. So also in your initial indication as per the DRHP, the offer for sale size was supposed to be much higher. There are changes that have happened. If you could explain to us the reasons behind those.
So basically, I think in offer for sale, you have a band of plus minus 50%. So we have actually, from the base case, we have reduced it by 50%, which is still in the range which is there. The idea was that from a promoter's perspective, we felt that we should not dilute. And since others were not anyway selling, so we decided from the holding company perspective to minimize the offering to ensure that we only offer 10%, which is minimum required, and not really sell more.
Okay. So also let's come to your financials as well. I think in FY22 your net loss had widened to 295 odd crore rupees compared to 122 odd crores in FY21, and the total income had stood at 3841 crores for FY22. Recently you've turned profitable in FY23 as well. Your profit margins especially are very, very strong at this point. How are you looking at the financials panning out? What will continue to help you to sustain the growth now on the profitability and the margin front?
So if you look at our general insurance business, there are basically 3 key drivers of profitability. One is the loss ratio, and loss ratio, the way, and this is my view, personal view. So the loss ratio should be seen of companies, irrespective of the age. The second is the expense ratio. Here, I think over a period of time, one should see the expense ratio, and expenses also should be seen for each individual product separately and not overall, because different products like motor, retail, or retail health, etc., have a much higher expense ratio compared to, say, crop insurance or health, group health, the government health business. So the second is this, and the third, which is a very important factor to drive profitability, is what is called as float or leverage, the AUM which a general insurance company has. So you would actually notice that as of December 23, we have an AUM of about 15,000 crore. And say compared to companies which could be in the top four, top five, if you look at them and compare to Digit, in 6 years, our AUM would be for some of these companies who could easily be, say, 50% or maybe more in AUM. So one has to look at all of this. So as we go forward, in terms of our AUM, in terms of loss ratio and expenses, they will determine the profitability.
Okay, understood that. And any other forays into any other categories that you will be looking at over the next few years, sir, beyond the offerings that you're doing right now?
So, Sakshi, we on a continuous basis keep exploring both geographies, channels, and products to say where there is an opportunity for us to play a slightly differentiated game or an opportunity for us to enter the market. So, slowly and steadily, I think we keep adding, as I said, channels, geographies, and products as we go forward.
So, how are you looking to scale up the business from where it is currently, sir?
So, Sakshi, I think I'm somebody who doesn't believe in giving very specific sort of guidance or no the way forward. But all I'll say is, if you look at, we started our business in 2017. Our first policy, if I remember, was issued in October 2017. So we are just 6 years old from issuing the first policy. And in this 6 years, if you look at our premium growth, our revenue growth, etc., and you can compare it with any startup in any sector with this vintage or any insurance startup anywhere in the world, I would say we have done really well in terms of the growth. Now, going forward, endeavor would be to try and keep attaining more and more growth at the same time to maintain the profitability. Our business is very dynamic, and things are not as stable as one would want them to be. So that's why I'm just a bit conscious, because within Digit we never really drive business to say that this year will grow so much, or this should be a line of business mix, or this should be a channel mix. I think we want to work on a basis that if we see opportunity in some area, we can grow very fast. And if we don't see opportunity, we can also withdraw from that. So this is really the philosophy with which we have built Digit, all of us, in the last 6 years. And I think we'll continue with that.
So, there's also a rising competition in the entire insurance space, banks, NBFCs. We see everyone wanting to get into this space, especially because it still remains a very underpenetrated area. And along with this now, the government is going to be coming up with the Bima Sugam, platform as well. How are you really looking at all of these shaping up, and how would you continue to maintain your USP within that?
So I think if you look at in the last 6, 7 years, I think one new general insurance company and one health insurance company have got licensed in the last 5 years. All big banks, everyone is around, and Sakshi, in a country like India where economy is growing, competition will only increase. So personally, I worry less about competition. What I actually foresee as positives is that more and more general insurance companies will actually get listed. And I think that will be a good sign. It will bring in some minimum discipline. Secondly, our business is very capital intensive, and it also has long gestation period from profitability perspective. Thirdly, promoters of unlisted company have to hold 51% shareholding at all times, and of listed companies, you have to hold 26% at all times. These norms, to the best of my knowledge, don't exist in any other sector. So this business is really long term, and only very serious players would come. And I would say competition is always welcome. And as is also said that as the sector is growing, more companies get listed. I'm personally optimistic about the sector.
Okay. So also a little bit on the recent penalty imposed by the IRDAI for non-disclosure of the change in conversion ratio of compulsorily convertible preference shares, and the regulator previously has also issued a show cause notice to the firm in the matter. Is the regulatory overhang going to be there for some time before things get resolved, or do you think you've largely dealt with all of these issues that the regulator had raised?
So, Sakshi, I think this show cause notice was issued on the matter on which now regulator has put a fine of 1 crore rupees. So, I think from regulator's perspective, this matter is now closed. All the details, exactly what the issues were and what the response was, what the final IDA order was, all this is part of our RHP, which is now in public domain. And I would really encourage people to go through that if they want to look for details, rather than I want to say anything offhand here.
Okay. So, and lastly, if, as a message you'd like to share to all our viewers, many of whom would be looking as a prospective investor to your company and your IPO as well, what would you want to tell them?
I can only tell them what I normally do when I'm looking at investing a company. One, obviously, study a bit in terms of what they are buying about the company, and secondly, also would encourage them. All of them would have some agents or someone distributor with whom they're buying insurance. Talk to them about feedback of Digit, and most importantly, I think they should just visit our website, godigit.com, try and generate a quote and see what the experience is. Visit different social media handles to say what customers tell about Digit. And if they like Digit as a company, as a consumer, they like our financials, and we would really, really be happy if they decide to participate then in our IPO.
All right, sir. Well, on that note, thank you so much. Truly appreciate your time with us and helping our viewers really understand more about the company and the vision going forward. I'm wishing you all the very best for the IPO, and here's hoping I can catch up very soon again, right after the IPO, to really understand more about the business. And thank you so much for this prima facie interview on the upcoming IPO.
Thank you so much, Sakshi, for having me. Thank you.
Thank you. With that, viewers, we wrap up this very special conversation with Go Digit. Remember, you heard it first on Business Today that next week is when this IPO could have come. Virat Kohli, Anushka Sharma backed IPO. Remember, they've already made substantial returns since the time they invested in 2020, and about their wealth has jumped more than 3.6 times as. Of course, the company is now IPO bound. Of course, they are not part of the selling shareholders, but there is enough and more that the management has shared on the kind of vision that they have for growth over going forward from here in the insurance space for Go Digit. Many thanks for tuning in, but do stay tuned as we continue to get you more exciting conversations around earnings.